Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hirol Dadia. One sector that has taken everyone's attention with the way the Q1 numbers have panned out is the IT space. But where from here on, that's the key question to ask. Moshe Katri, Managing Director, Equity Research at IT Services and Payments, Wedbush Securities, joins in. Moshe, good morning and welcome to the show.
Good to be here. Thank you.
Always a pleasure to speak to you. Moshe, my first question coming to you is from the companies that have reported numbers from the mid cap to the large cap IT players in India, what's your first reaction to the first quarter?
I would say we're in a very unusual situation these days looking at the sector because on one hand, you're seeing a very large deal pipeline and actually deal wins coming through for a lot of companies. On the flip side of it, you're seeing clients saying, let's not start ramping today, let's wait a quarter or two. And that's definitely impacting visibility for the sector. So it's a very kind of peculiar situation that's impacting visibility for the sector. And I think in general, it feels that calendar 23 is going to be more of a transitional year for the sector after 2-3 very strong years in terms of IT spending.
Absolutely, because the Indian IT sector was probably amongst the best performing sectors after the COVID pandemic, with clients who had actually, accelerated their IT spends significantly. And now you're actually seeing, headwinds where, the larger corporations in the USA, Europe have actually gone ahead and cut their non-essential IT spend, right? Is that a phenomena that you think is troublesome?
Actually, let me just correct one thing that you said. It seems that the majority of the spending pause is happening in the US. Europe is holding up exceptionally well. So, I think all this really started because of the mini banking crisis that you had in March, and that triggered that dip, and that that continues until today. So, the pause is happening here in the U.S. The rest of the world is still holding, steady, if you will.
So whichever regions we are seeing the IT budgets being cut, do you think we can call it a cyclical problem?
I think it's too early to kind of come out and say that. I think the next few quarters are going to be important. And then not only that, you still have to deal with the budget cycle for calendar 24. Is that going to be on time? Is it going to be delayed? So you have a couple of things that you have to focus on. And I think it's very dynamic in terms of some of the changes that you're seeing out there.
Right. And overall, if you see the Indian IT companies, how difficult or how simple is it going to be for them to find new revenue sources? Because the older ones probably are getting replaced by global capability centers as well as AI. What would be key to their survival?
Oh, I think at this point, I'm not worried about their survival, frankly. I think at this point, it's more about when do you start ramping some of those new deals that are being won as we speak. And once you start ramping, then you start seeing growth again. I'm not definitely worried about any sort of survival issue here. That's not what we're talking about. I think at this point, it's more about timing than anything else. You have other things that are going to trigger growth. I think generative AI is going to be another one of those things. You're seeing some of the tier one offshore companies investing heavily in that. You're seeing people like Accenture is talking about a $3 billion investment in that business. They did something very similar 3-4 years ago in cloud. So you'll see growth. I'm not worried about growth, but it's more about timing than anything else.
Okay. And you have to look at the constant currency revenue growth of Indian IT companies as well, right? A negative 4.2 to a positive 1 in the first quarter as compared to high single digit or probably even double digit that we saw last year. Infosys, I mean, we know what the number looks like in FY24. Wipro guidance, again, a -2 to a +1. HCL Tech, a 6 to 8. Now, taking the guidance and the kind of deal making and the pipeline that you already spoke about right now into consideration, does the arithmetic, according to you, really add up?
Yeah, I think when you're focused, if your business consists of what we call discretionary projects, these typically get paused. And if your business focuses predominantly on projects that are related to cost takeouts, running the business, I think you should be fine in this environment. So yeah, it does make sense. And this is a market where you are seeing any sort of, you're seeing a pause, anything that's considered discretionary. So yeah, you're definitely seeing that. But again, I think ultimately this will flow back and you'll get funding back. The question is when.
Right. And then, when you spoke about, Moshe, about the opportunity specifically from a generative AI perspective, where larger tier one players are actually investing in this segment, right?
Yes.
How efficiently will it be able to drive or shore up margins for the industry? Because it's already in a slowdown. Again, one is the question about timing, and two is, does this opportunity mainly lie in the hands of the behemoths, the bellwethers, and this is not something which will come to the support or rescue of the mid-cap companies?
Yeah. So you have to remember that during the last downturn, many of the tier one offshore companies exited that downturn with peak EBIT margins. This is a business where you can really fine tweak your bench to be able to meet specific margin targets. So I'm not really worried about margins at this point. And generative AI hypothetically can actually improve productivity, can actually help margins down the road. So, I think at this point, what companies have to decide, given the slowdown that we're talking about, is how much cushion in terms of flexibility they need to leave on their bench to be able to absorb demand when it comes back, and how much, on the other hand, they need to cut. And that's really a very sensitive balance. You don't want to cut too much on your bench, just because when demand comes back, it takes some time to build up that bench. And if you don't have the right skill base on your bench, you will lose business. So it's a very, very delicate balance you have to build right now in terms of flexibility that you need to have in terms of skill base on your bench.
Right. And then if you have to talk about the segments as well, in this quarter, we mainly saw BFSI, telecom, retail, and communication. These were the verticals which were most hit, right? Manufacturing technology, relatively okay. However, HCL Tech, due to the exposure to products and platforms, was relatively better as compared to the others. From the business segment perspective, where do you see, some bit of cushioning coming in for the rest of the year? And which companies do you think would be cushioned?
All right. So when you talk about products and platforms, and obviously this is a business that HCL Tech acquired from IBM, remember, it's a bit of a different kind of area, because these are typically very sticky businesses, especially if you have clients using your platform to be able to conduct their daily activities. So that business will be recurring and will be pretty sticky. In terms of other verticals that are doing well, I would say healthcare and life sciences are doing exceptionally well for the sector. I would say that BPO, or business process outsourcing, is also doing pretty well as a sector. But typically in the slowdown, you will have the typical weakness in financial services / BFSI. You'll see that in high tech and telecom. You see that in retail. It's pretty typical for any sort of a slowdown.
And from deal-making perspective as well, as you mentioned, the pipeline is healthy, but stretched, right? And the stretched again becomes a timing issue. So when you're talking of extended deal closure period, you're talking of insourcing. There are large contract cancellations also. There is vendor consolidation happening. There are project ramp downs. All of this are now coexisting with large deal announcements and elevated outsourcing demands, right? How do you put that 2 plus 2 together?
Yeah. So the pauses and the delays are happening on the discretionary side. The deal flow that's coming through is coming in on the cost takeout side of the business. And this is really what's going to drive growth, in my view, in the next few quarters. So, but what we do need, as you said, is really the ramp and the funding to come through. So again, it is more about timing than anything else.
Hmm. And Moshe, what is the hiring and the attrition indicating to you? Because in the first quarter, the headcount for most of the IT firms have shrunk, but the attrition has eased as well. So what would your takeaway be from there?
Hiring is a function of demand, so not huge surprise. And as I said, companies in the space have a lot of flexibility in terms of how many people they need to have or they want to have on their bench. The attrition is also a function of demand. When demand slows down, attrition will come down as well. So again, these are natural extensions of what's happening as we speak.
Hmm. And from if you have to look from an investment perspective, I was just looking at the FI trend, in Indian IT companies. It's been on an absolute decline so far, wherein FIs have constantly probably taken out money from IT sector as a whole. Is that actually telling you that the conviction for Indian IT companies is not very strong? And to see that build up again, we will need that FI strength to come back.
I think FI strength will probably come back once you'll seeing deals starting to ramp. So remember, if the banks in general, the financial services companies, are going to go through a painful environment, especially when rates are coming down sometime next year, they will have to focus on cost takeout projects, and they will be funding these. So again, it's a timing issue, and if it's not during the next 6 months, it'll probably happen sometime next year.
Right. So what would your view be on the sector from a valuation perspective? Let's break it up between the large cap IT names like TCS, Infosys, Wipro versus the small caps or the mid caps.
Yeah, so during the last downturn, these companies kind of troughed at PE multiples in the low teens, 12, 13 times. And during the peak times of when things are really good, these companies traded somewhere in that mid to high 20s in terms of forward PE multiples. We're kind of somewhere in the middle right now. And it's kind of interesting because, as an investor, you'll probably start looking at companies' earnings based on next year's numbers, right? So typically you have a 6 to 12 months horizon. And this is a time where investors will start making assumptions about next year. So we've been kind of a bit more constructive on the sector, especially given the fact that you've seen deal flow coming through, you've seen new deal wins, and given the fact that it's at this point, it's more about the timing in terms of when you start ramping some of those deals. We like emphasis. I think we believe the company's doing all the right things to be able to stay relevant, especially in terms of the generative AI kind of deal flow. We like Accenture on the large cap side of the business. And then we also like the BPO names. We like WNS. And then we also like some of the digital names, the likes of EPAM and Globant. These used to be the hyper growth names in the sector.
Right. And would you say, as we spoke about valuations already, as you're saying, we're pretty much in the center right now, and it's an interesting timing for it. Is the valuation pricing in all the negatives already?
I think it's a good question, and probably the best way to look at it in terms of responding to the question is to look at what happens for Infi stock. Stock was down about 10% post earnings, and it's probably recovered about half of that, and since then. So I think that the market kind of understands that the next few quarters are going to be kind of muted in terms of growth. And the market is starting to look beyond the next few quarters into the next calendar year.
Right. And then an interesting move that we saw as well was, I'm just talking about the last from the day TCS announced earnings to now. If you look at the Nifty IT index since start of the first quarter session, we were somewhere in levels of 29,500 on the Nifty IT index in India, right?
Yep.
The time we announced TCS earnings, we probably galloped to levels of almost little over 31,000 on the Nifty IT index, taking the commentary from TCS into consideration. And post that, the moment Infosys came out with the numbers, the index has dropped somewhere in that range of 29,500 to 30,000 already now. Now, clearly, the markets have been tracking, bellwethers to actually understand the trend in terms of what could happen in the IT space. So do you think that comparison, that narrative from a Infosys, from a TCS is going to be absolutely crucial to understand what the mid-cap companies like an Emphasis, or LTI, Mindtree, etc. would do, or do you think it should be absolutely treated differently?
I think typically the group acts, in a correlated way. That's number one. Number two, I think it's been a bit confusing here, and I'll tell you where the source of confusion has been. Mm-hmm. If you look at the large cap names, among the four leading names in the group, only two of them provide annual guidance. Infosys and HCL Tech. TCS doesn't, Wipro doesn't. So, TCS told you about the pipeline that looks good, but TCS didn't tell you what the growth's going to be for the year. And Infosys did. And that's why I think you have so much confusion, because you're getting information from different sources. And it's almost, you're not really comparing apples to apples here, because not all four companies provide annual guidance. So, but I think Infosys probably gave you the worst case scenario in the group. And again, the fact that the stock has recuperated and recovered half of its losses since reporting probably tells you that the street is looking beyond the next few quarters into fiscal 25 earnings these days. That's what we're looking at.
Right. Moshe, my last question coming to you is, from now, would it be right in terms of timing to start nibbling at IT names? You've already told us which are your preferred picks, but is this the right time to start nibbling, or would you advise to wait?
If we believe that the macro environment doesn't get worse, absolutely.
Right. So I think that's something that we should be watching out for as well. Thank you, Moshe, so much for joining us on the show. It's always a pleasure to get your views and your candid comments as well for the Indian IT space as a whole. Thank you. Stay safe.